Video 1. The term assets, it refers to anything which a business possesses or owns, means anything which you have purchased and belongs to you is an asset. Example, furniture, building, machinery, motor vehicle, cash, debtors, stock, because these are your own things. So that's why they are referred to as assets. Next we have types of assets. The first type is fixed assets. These are long term assets which are purchased for long term use. These are not purchased with an intention to resell it in the market. Example is furniture, building, machinery, motor vehicle, etc. Next is current assets. Current assets change their value in 1 year due to various transactions. Example is cash, because you may have cash at the beginning rupees 5,000, but by the end of the day you do not have rupees 5,000 because you must have received payments from the debtors and must have paid to the creditors also. That's why the amount of cash in your cash box keeps on changing. Similarly, stock, you purchase the stock, stock increases, you sell the stock decreases. Debtors, bills receivable, prepaid expenses, etc. Prepaid expenses are the expenses which are paid in advance, that becomes our asset because we do not pay in advance for a year or more than a year. So the basic difference between current assets and fixed assets are, fixed assets are to be used for a period more than 1 year, whereas current assets change their value within a period of 1 year. That's why they are referred to as current assets. Next comes liquid assets. Liquid assets are those assets which can be converted into cash as and when required, easily converted into cash. You do not have to wait for the liquidity. As and when you require it, you obtain the liquidity from these assets and the payments can be made. Example is cash itself, it is very liquid. Debtors, they owe you the amount, so you can ask your amount. Bills receivable, etc. Liquid assets, all liquid assets are current assets, but with an exception of stock and prepaid expenses. Stock is a current asset but not a liquid asset, because the sale of stock depends on the availability of the customers. Similarly, prepaid expenses, the advance of expenses which you have paid, you cannot ask the reimbursement or the refund of those expenses. So these are only two expenses which are current assets but not liquid assets. The next type is tangible assets. Tangible assets are those assets which can be seen or touched. Example, we can see furniture, we can see building, we can touch motor vehicle, machinery, cash, stock, debtors, bills receivable, everything can be seen and touched. Intangible assets which cannot be seen or touched but can only be felt. For example, which can be those assets? Goodwill. Goodwill is the reputation of the firm. The reputation of Springdales can be felt, it cannot be seen at all. It is the goodwill of the school that is an asset for the firm. Next comes patents. Patents is actually related to the invention or invention of a formula which becomes a patent right of the inventor, that nobody can use his invention in his or her name. Next comes trademarks. Trademarks are the symbols legally registered by a company. You must have seen the Nike symbol, you must have seen the Puma, you must have seen any other brand's symbol which becomes the trademarks and nobody else can use these symbols. Copyrights. Copyrights becomes the written aspect of the copy. For example, an author has the copyright of the content of that book. Fictitious assets. Next, the last type of assets is fictitious assets. These are not real assets, these are imaginary. The difference between the fixed assets, fictitious assets and intangible assets is that intangible assets can be sold in the market. We can sell the goodwill in the market, and that is when we sell our business, we get an amount in return as the goodwill. But fictitious assets is just a temporary or imaginary assets which are raised. For example, if a business is started, it needs to advertise itself. When for advertisement for 5 lakhs rupees are spent, the business thinks that it need not spend for another 5 years any amount on advertisement. It means the amount of 5 lakhs which is spent on advertisement can be split into 5 years because it belongs to 5 years. Every year's expense become rupees 1 lakh. For the first year, 1 lakh will be considered as an expense, whereas 4 lakhs becomes the fictitious assets of the firm. Thank you.